right, good morning, comment allez-vous, how are you? Ni hao ma, jumbo, Ohio. Good morning, everybody. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of helping you plan trades in advance. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So, my name is Wayne. Let me know how it can help. Once again, I think technical and fundamental analysis and even trader psychology is all fair game. I've learned a few things over the couple of decades that I've been doing this. But before I was a trader, I was a businessman. So I bring some baggage from the world of venture capital, high-tech startups, and entrepreneurship. Also worked at NASA. Yeah, I worked at NASA. It was a heads-up display research assistant, which is a fancy way of saying that I flew simulators. Not even simulators. Flew virtual reality before that was even a word. Yeah, like goggles and everything. What they did was psychological testing under duress and stress. Hey man, so I bring some of that to the Forex table because we're under duress and stress all the time, but can you perform? So anyways, so all of that kind of stuff is very interesting. So let me know how I can help. I know you bring a lot to the table as well. Okay? And so how do we leverage what we know to become better Forex traders? But also, how do we reduce some of the stuff that maybe is not so helpful? So the way I open up my book, I talk about how we must all be entrepreneurs. Because it makes no sense that we want to trade Forex. We know most Forex traders don't succeed. And yet here we are. So obviously we're willing, because of our entrepreneurial spirit, to take on some risk to get an outperforming reward. But that attitude is dangerous. Okay? So we have to harness that beast that lives inside. So we can do that together if you want. So today I recommend we go through oil, gold, Bitcoin, dollar pairs, and yen pairs. But let me know if you want me to cover something specific. If you find today's live stream useful or maybe entertaining, please consider subscribing. All you have to do is click the little subscribe button. You'll be notified when I run these streams. You might also want to become a member of FX Bootcamp. It's very expensive though. It's $88 a year. I know, not affordable for everybody. It might be out of reach. But imagine yourself with 65 hours of hardcore training for a foreign exchange trader. How to take control, how to use technical analysis. There's a 16 or 18-hour course on monetary policy and central banking. There's another one that's probably 12 to 15 hours on macroeconomics, day trading, swing trading, price action, all the different basics of technical analysis, including pitchforks, for crying out loud. You like my pivot points? Man, that is covered. You will become an expert in using those indicators. Why do we use all these things? Because we're trying to predict the future. It's difficult, baby. It's difficult. So there are resources. If you don't have $88, you'll see in the description below links to all kinds of free training. If you go to youtube.com/fxbootcamp, there's a free training course. It's probably, what, an hour and a half? You can buy my book, Strategic and Tactical Forex Trading. There's free training videos, about 6,000 of them on YouTube in regards to my work. On the FX Bootcamp YouTube channel, on the Forex.Today YouTube channel, on the Trader's Way YouTube channel, on the FX Street YouTube channel. 6,000 hours. Most of them are an hour long or more. I would have to guess there's probably 10,000 hours. Cool. You're going to need a trustworthy and ethical foreign exchange broker. For me, that's Trader's Way. They earned my loyalty and respect when the Swiss National Bank pulled their peg, surprised everyone, and major brokers went out of business. Major. The biggest ones went out of business. Apparently, they were trading against their clients. I don't know why they went out of business, but that seems logical to me. And Trader's Way was perfectly fine. And when I contacted them, I'm like, what's up? Are you guys okay? They're like, yeah, we executed all the trades. Right then and there. Earned my loyalty and respect. So maybe they can earn yours. Visit tradersway.com, open up a demo account. And now you might just have an execution partner for your successful Forex trading business. Okay, how about that? Did the other one have sound? Yeah, the other one had sound. All right, well, this one has sound. Yeah, so gold, oil, and Bitcoin. I'll cover that. What Forex pairs do you want me to cover today? How can I help? I'm a servant. How can I serve? What do you have, as they say in Atlanta? Euro dollar, piggy. Dollar pairs. Piggy pairs. Mr. Kennedy says all reports are worse for USD, and yet it's staying stable. I'm not sure what you mean by worse, and I don't know what you mean by stable. Let me know, Kay. Expand on that, maybe. All right, well, that's it, huh? All right, so we can do that. Okay, so let's take a look at the indices. Piggy is super weak. Dollar's super weak. Okay. That's a risk on mode for dollar when it's weak. That's risk on. So Ashish says Bitcoin. Well, looking at dollar, you would instantly say, oh, Bitcoin up. That's that. Okay. Euro trying to stabilize. Yen trying to stabilize, but that yen, did you see the yield? Man, it was low there for a bit, huh? Interesting stuff going on there. I checked yesterday and I didn't see any new yield curve control adjustments. Not recently. Yeah, crazy. Hey, Jim. Amazing. Okay. Now we have this upward move again. So you guys are interested in pound. That's good. Dollar pairs in general. Okay, fine. So that's easy. Let's start with the pound. By the way, I appreciate that because a couple of days ago I asked you guys and you only wanted euro. And I'm like, euro? Why the hell would you be interested in euro when pound is crashing? Okay. Let's take a look at the world here. This one's worked out really well. What do you think about that? It's pretty, huh? Kicking off the monthly central. Actually, it's kicking off the monthly M3. Mr. Kennedy says PPI was bad for USD. Okay. I was working on something else actually, so I don't even know what the PPI is. Let me pull this up. Boom, boom, boom. La la la, la la. Okay, core was 7.6. Inflation's down. Okay. Why do you say that's bad? Falling inflation is good, isn't it? Oh, see, I don't think subjectively like that. The down. So bad means weak dollar, but you have to understand weak dollar is good. But okay, I know what you're saying. Okay, now I know what you're saying. No, so you'd look at that, and that's good news, and therefore the US dollar would weaken, which is good news. Now, if it was any other currency besides the reserve currency, then that would be strong currency. And maybe, so by bad, you mean down. By bad, yeah, sorry. Like, again, good and bad, I had to pick on that. So I didn't understand the bad. Dollar's weak. That's good. Okay, anyways. So here we are all the way down. Pound is weak. And here's the thing that we talked about, I don't know, last week. Look, I mean, dude, I even wrote it down. So we were talking about it in here, if you recall. And I said, so this is 1, 2, 3, probably 4 weeks ago we talked about this. And I had it rising up. And the plan was to either sell it at 94 or sell it at 95. Because I don't know when it's going to resume the trend. Okay? Okay? So here's the interesting thing. You look for a reversal pattern at these prices. Because remember, we know the price, but we don't know the time. And so you could sell here, or you could get the lower low, lower high and sell there. We call that a 1, 2, 3 pattern. Okay? Cool. But since this worked, okay, this is the starting point. And based on that, and remember, we did all of this work over here. Okay? So since that's the starting point of the down, and this is the confirmed, okay, the end point is projected to be here. Okay? And we did do this 4 weeks ago. Okay? I even wrote it all down. Okay. Cool. Pound CAD, let's back this out. With oil prices still stuck below even 90, or let's say below 100, yeah, this pair has been hurt. Now, we were in the same situation down here, and it did rise up. And of course, the plan on this one would be like keep it below the range or this one. And it went even higher. Holy smokes, it went higher. But that had to do less with pound and more with CAD weakening. Okay. And so the projection here is if oil stabilizes and kitty CAD wakes up, we're only getting back down to here. And that's what this is telling us. We call that an inside month. So this is crazy because now we got a higher high and then we're back in here. It's that they're both weak. So I wouldn't trade them right this second. Okay. Here's one we've been watching closely. I think Johnny was on this one, and we were talking about Johnny had to make a decision because I believe he was short in here, maybe here. And it's the same analysis that we did on the other pair. But we had a harder line of support. And I said, well, you need to make a decision. Are you going to try to shoot at rabbits, which means it's a shorter term trade? And if so, you get out here and you don't worry about it. You could say, well, based on the time of year, you're going to be conservative and take the profit. So I don't remember if you shorted here, that would be an out, or here, that would be out. One's a day trade, the other one is a bit of a swing trade. And I said, but you could, and this is just a decision, you could hang on and see if the long-term prevailing trend resumes. And in that case, your target is 114. But don't be upset if it doesn't work. You just made the decision and you're risking opportunity cost, not profit. So it could have done this. It could have stayed in the range. Okay, that's why you got to have the prevailing trend. What sets the prevailing trend? The fundamentals. Okay. And I said the other cool thing about trading, oops, I'm trying to get that straight. Maybe I'll use this. Okay. The cool thing about trading is you can always get back in. So if Johnny had taken profit here, okay, he can catch the lower low, get the retest, and then short again, either on what we call a roll reversal or a retracement back to the moving average. Okay, a mean reversion. So now if we look in maybe on a 1 hour chart and we zoom in a little bit, that's what I'm talking about. Is like, let's say you exited sort of in this area because you weren't sure we were going to break. Okay, you can see there's multiple opportunities to get back in. And so here's the roll reversal idea. And now if you shorted here, so you exited here, and now you're back in here, same price. You see? Same price. And now the resumption of trend. Okay? And you go back to the old target, this says this. Okay? Exit, enter, exit. Out, in, out. Lovely tuljumum. Yeah, that's right. Pretty sure Johnny was on that trade. We had a whole conversation, right, Denise? There's a whole thing. And I'm like, if you decided to hold and not exit, don't get upset at yourself if it does this. You just simply made the decision and it's okay. But if you do get out because you're being conservative, you can always get back in. Most likely you'll get an opportunity. Oh, that's right. He took it here, didn't he? No. He did this. Yeah, he did that one. The lower low. Yeah, that's right. Lower low, lower high, sell. Good. Good. I don't know if he let it run, though. Yeah. Cool. How awesome is the day trading group, huh? Awesome. I'm glad we're starting to break some of the neutrality that's embedded into the market right now. Okay, cool. And you'll see much of the same across the board, right? Euro's a little different. Okay. This one's just farting around. I need it to roll over. Okay, want to keep it below that. Euro isn't as weak as I would assume. Not now. Okay. And CAD is weaker than I would assume. So Euro's a little stronger, especially with the weak dollar, because the euro is just anti-dollar, more than gold is anti-dollar. So if dollar's strong, euro dollar comes down. If dollar's weak, euro dollar goes up. Well, Frank, we've been talking about that for 6 months, maybe longer. So for people that are just doing it now, yeah, it's pretty late, bro. Yeah, pretty late in the game. Matrix says, yeah, the Rhine, yeah, drying up. It's pretty serious. Yeah. Now, I'm a fan of Chateauneuf de Pape, so I'm more worried about the Rhone. You can have the Rhine. I need the Rhone. Frank's like, been falling all year. Yeah. Well, there was a time, and I think it was a December meeting, where we watched the Bank of England meeting together, and in their summary of projections, or whatever that particular bank calls it, they forecasted a recession, job loss, and high inflation. Well, what more do you need? You're like, yeah, but besides that. What do you mean besides that? And now inside that move since January, there has been some strong rallying from time to time, but generally speaking down. So as a technician, as a trader really, you need to understand that fundamental move. But then technically, you have to, as a technician now, recognize when you have congruency technically and fundamentally. So an example of that. This is Euro CAD. I would like CAD to be a little stronger, but I understand why it's weak. Its largest trading partner is going into recession and oil's down for the moment. So kitty CAD's going to be negatively affected. But the longer term would suggest this should be falling. That's all. That's it. So it's more like, when does it fall? Okay. So like you look on this and you're like, Wayne, this is an uptrend. Yes, it is. On this time frame, it is an uptrend. As a technician now, you want to do things like measure when it's not an uptrend. So I have all kinds of tools for that. I like price action pivot points because I invented them. Okay. And I'm looking for periods of time when this is falling. Okay. And you might want to have a little more than that, a little more juice. So I can go to my price action pivot points. Okay. And say, it's doing two different types. It's doing regression and it's doing standard deviation. In this case, over 233 hours. So it's got to do the calculations. Wait for it. Wait for it. Okay. And so when this is tilted more sideways or down, you should be engaging. So you wait. Fundamentally a bear, technically a bull. You wait. Looks like, did I lose you guys? Looks like YouTube is struggling. We've had a lot of storms lately in the area. Like every night we're getting like 2 or 3 inches of rain. Sometimes that messes with internet. And I have redundant internet connections and they both have problems. One is coming in at 100 megabits per second or 150 megabits per second. And the other one's coming in at a gig. Oh, it's all good there? Okay. I'm getting, yeah, well, this is what I see. This went from a warning back to excellent, but this is what I see here. So as long as you're good, I'm good. So I'll keep going. So anyways, this is how you should trade. I stink. Where you just say, you wait for the technicals to confirm. So right now, okay, we got this going on. But using horizontal support and resistance, one could argue that this is your fake out and this could end up rolling back this way. Now, why would it fake out and roll around that way? Well, that's going to be news driven. Okay, the spike here is obviously CPI, not on Euro, not on CAD, on the United States. Okay, so it moved the market. And then we go back to doing what we're doing. And if that results in something like this next week, then I'm game on, but I don't go for it. I don't hold for a day or a week. I hold for a month or a quarter. Has a bank ever approached me to work for them? Yes. And it was actually a pretty amazing experience, Frank. I had just graduated from Harvard. And I posted it on my LinkedIn that, you know, I got my degrees. I think it was when I got my bachelor's. So I was still doing my master's, but I posted that I was officially awarded my bachelor's degree in macroeconomics from Harvard. A week later, SunTrust, which is now called Truist, Okay, big regional bank here in Atlanta, huge in this area, called me directly and asked me if I wanted to run their foreign exchange desk. Okay. I'm like, holy crap. So when people ask me, hey, did it really, did a Harvard degree really make a difference? I'm like, shit. Yeah. Instant. Like instantly. Pretty amazing, right? Don't ask, don't tell, Matrix. So anyways, yeah. Yeah, that was cool, Hope. And turning it down was pretty cool too. They don't, right? Anywho, so this is where we are. This is where we are. So Euro-CAD not ready yet. Euro-dollar, you can see what I'm doing here. I talked about this, was it yesterday? And I posted the link to FX Street. Somebody asked how to trade the news. And then I explained, see if you can figure this one out. And it's just a counter trend trade. Counter move trade. Counter volatility trade. And I said, see if you can figure out why I got that price. Now, the why isn't on this chart. It's a counter trend. And there's a rationale technically for it. And that's that. Is it a good trade? No, it's just a trade. Right? Look at this. Right? We're just below this area. That's all. Got a little top there. Just nothing. It's just a trade. Okay. Euro Kiwi doing really well. Okay. I mean, again, down, consolidate, breakout. Do you remember that whole breakout pullback idea? Okay. That could be considered one here. The actual support is here, so this is a guideline. So here's what I do on breakouts. Okay. Okay. You got to connect these and connect that bottom. Okay. And there you go. And this is in, again, if you pay the $88 to join FX Bootcamp, you will learn how to do a breakout trade. And the standard operating procedure, as soon as you get the lower low, you look left, you drag this across. It's in the price action course. Okay? And what you are planning on is this. Okay? You already have it in your mind. As soon as you get the lower low, okay, you're going to look left, drag it across. And it's a guide. It's not perfect. In this one, you're like, Wayne, it's not perfect. It only kicked off the moving average. Well, it's going to be one of them, bro. But the idea is you're waiting for the pullback because bears sell lower highs. So now you use whatever technical analysis you use that you like, that you feel comfortable with. You use anything you want. You can use pivot points, moving averages, price action, pivot points, a rune, oscillators. Wasn't there one on an alligator or something like that? Whatever you want. That's all there is. I don't care what tools you use. To me, they're all irrelevant in the sense that they all use very different math to come up with the same thing. Sell a lower high. That's all. Yeah, Matrix, that'd be wonderful. Okay, so you can see, like, using this area or this this setup, you sell into the moving averages, you sell into the moving averages, you sell into the moving averages, and breach, retest. So here and here, here and here, you're technically in a range. So when you're in a range, it's different now, right? It's different. You buy low, you sell high. You buy low, you sell high. Okay. Oh, that's not a low. That's not a high. And then what? Bum-ba-da-dum. You notice. Oh, my God, Becky. Okay. You notice. That's supposed to be straight. Let me get that tool. There you go. Okay. The breach. And what you're saying is, now that we're a lower low, we have to resume trend. Okay? Kick off, right? Kick off the moving averages. Somewhere. And that's a decision. Where? Here or here? Yeah, that's the whole point. The Phillips curve, yeah, that's old. Probably meaningless. So if people are talking Phillips curve, they're probably saying they don't know what's going on. It feels chaotic. Let's go. Let's let's go old school to try to figure this out. Anywho. Yeah. The question is, some people are trading peak inflation. Fine, totally fine. Some people are trading terminal rate. And a third group is trading recession, not recession. Depending if you're basically, let's say, a commodities trader, bond trader, stock trader, there's different participants breaking down the scenarios differently or just separately. So a stock trader is just thinking, have we printed the bottom? Should I be buying back in? The bond market is very much focused on the terminal rate. And that's why you see the 10-year T-note drop from 3.5 down to 2.5. Holy smokes. That's why you see a 2-year very significantly higher than a 10-year on yield. So they're doing that. Okay, so on and so forth. But, trying to model things out with a Phillips curve is kind of, it's interesting. It's just, it just seems like the wrong thing. That's all. Yeah. Whatever. Norway. Look at the beautiful move on Norway. Okay, up into the moving averages. Oops, let's do this in pink. Up into the moving averages. Okay. An entry here last month projected an exit here. We got just crazy close to that. And now we're just retesting last month's target. We started way up here with the double top, so I should probably draw it there. Okay, look, do people use monthly pivot points trading Euro Norway? Yeah. Is this the flow towards high natural gas prices? Yeah. Is this a flow toward potential risk events regarding natural gas in Europe this fall? Yep. Okay. Interesting, huh? That looks like European money flowing to Norway to buy natural gas. I think Europe is doing everything they can to store as much energy as possible going into the winter. Okay. Let's do that gold, oil, and Bitcoin and then get out of here. My oh my, WTI. Okay. Okay, you see the bottom printing? Interesting. I would connect this with that and bring this around. And we have a new floor. This is supposed to be like that, but I guess we can just get rid of it. There you go. Okay, so we're climbing Jacob's ladder here. And we did some analysis last night on WTI, and I drew a bunch of red lines. Careful. Now follow the price line here. No. Oh. Connect that one with that one with that one. Be careful. Be careful. Be careful. Be careful. Okay. Bears may be looming. There could be a lot of sell orders sitting in there. Yeah, Darko's crushing it on crude. Well, this is why I do oil. By the way, for those that attended yesterday's lecture on the transportation of oil and gas across Canada and the United States, as well as a deep dive into refining raw crude into products. We covered distillation. We covered cracking. We covered blending. And we covered treating. And then we went back to the most common, like every refinery has at least a distilling tower. And then depending on the type, there are, and I showed this too, there are big refineries that do a lot of things, and there are small refineries that do very specific things. But they all have a distilling tower. So then we did a deep dive and we looked inside the technology of this, right? Of the sieve trays with weirs, and how that all works, and the pumps, right? And the reheaters and all that kind of stuff. The video is up, but I'm also as soon as this live stream's over, I've added a documentary, or I'm about to add a documentary as a bonus. It's Shell Oil back in, I don't know, the 1960s, made an educational video on refineries. And the refining process, it's 21 minutes long. It's really interesting. It's 1960s Americana education. You can almost hear, you know, the projector. So anyways, it's really good. And it goes into slightly different technologies. I'd mentioned that these weird trays are, you know, the basic and very common way of heating, reheating the liquids into a boiling point, and then, you know, as the vapors go back up, and then the heavier liquids cool and comes in and heats up. We're talking about that. And then I said, well, there's other technologies that increase the surface area to try to even make, you know, this process even more efficient. And in that video, they were talking about bubble treaters in their distillation process, which is really cool. And there's even newer techniques than that, but I didn't want to get into it, but they do get into that. And I was surprised that even then that was being used in bubble treaters, which is really cool. So I've added that 21 minutes. And I think now that you've gone through the course to this point, you're going to go through and you're like, I knew that, I knew that, I knew that, I knew that, I knew that. So I think that's cool, where it's suddenly like you didn't know how to speak Italian 3 weeks ago, but now you can listen to conversations in Italian and know what they're talking about. And you're like, oh my God. Okay. Bum, 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 bum. All right. One thing to also note, for the first time in a long time, the average price of gasoline in the United States is $3.99. We went from above 5 and now we're below 4. Interesting. The question is it a supply issue or a demand issue? Is it because people didn't drive to grandma's house? Remember, Target and Walmart are feeling the pinch of the economy, but Louis Vuitton and Moët Chandon and Dom Perignon and Tiffany's, they don't. They don't feel the pinch. Rich women are still buying Coach bags and Gucci bags, apparently. So anyways, higher high. Looking for dips. This could have been your dip, that right? Or there's going to be a dip later today. Okay. It could do, it could do something like this. Or inside there, it did, you know, that was your little move, but that one's more of a price action issue there than a role reversal. So there could still be some down later and someone might want to pick it up. My guess is 25,000 is psychologically important to human beings. And that's what we just did. So it could come down from 25 to 24 and then back to what, 32? Hey man, that's your call. Gold, I'm hoping to see the rollover. I don't know, what, a mini Head and Shoulders. So we're getting there. If this doesn't roll over basically now, I might have to treat this differently. Frank says, rich people made a lot of money in 2020. Yeah, actually quite a bit. But even now, like for example, Disney did well today, right? I bought Disney, 2 months ago, and I'm up like 10 or 15%. Like, oh, I thought the stock market was down. Not if you were buying at the bottom. So anyways, as far as timing, this is the right price. And I don't know if this is the right time, but it'd be interesting if it goes this way. But right now, dollar is weak, so this might go up. That's that. So gold, I think it's time maybe to, I don't know. All I can say is I'm not interested in it now, but the up part is part of the less aggressive Fed. But technically you would say, well, we're at the high point here. Okay? Like, let's look at it from this point of view. If I'm an investor, I want to buy low. Okay? And I don't consider that low. Maybe it continues to go up, but maybe in the future, let's say, maybe in the future it goes up into this area, right? Then it comes down, and then maybe 1800 is cheap. But when we were at 1700, 1800 doesn't seem cheap. So even if I want to own gold, I don't think that's the right price. Or it might be the right price, but the wrong time. So if I buy it at 1800, it'll be at a retest in the future, but not now. And I think if a bear wants to bring it down, already plan that out. So, right, you see? You see what I mean? It might be the right price if you want to own it, just not the right time. Diago says, hey, 1820 is the number, and then it'll come down. Yeah, same. If I'm not going to buy it, I don't really care. But let's say you're right, Diago, and you probably are. Okay? We get a move like this, and then what? And now, in this situation, I can engage because I'm going to feel like we're either here or here. Sweet. Sweet. But currently, fundamentally speaking, gold is neutral. Okay? There are some things like seasonality that say, well, typically this time of year, gold does go up. There are other things like, well, but this might not be the case. If inflation is coming down, maybe, you don't need a hedge, whatever. So there's conflicting fundamentals, so therefore you're neutral. And in particular, one of the conflicting points that gets you to neutrality in this pair is that technically it's going up on this smaller time frame, or on even a daily time frame, if you're just going to, because it goes back a month, right? So if you're looking back a week or 2 weeks or 3 weeks, well, technically this is up. And technicals might be the tipping point where if suddenly the trend is technically down, it might just lead to maybe a slight sell bias. Okay? But people that are subscribers to my super secret, fundamentally based signal service, which I can't tell you about, nobody say anything. Shh. If you don't know, you're not supposed to know. It's plotted out, the neutrality. And it shows price going up, but the asset being neutral. So you're like, yeah, dude, already knew that. Cool. So now you're waiting. Nice. So I'll leave you to that. I got a lot of work to do today and this afternoon. We have the swing trading group where we plan out all of next week. Wonderful. We're through the big news of the month, so now we can kind of get an open eye view of what's going on. There's no Fed meeting for a while. The next inflation is not for another month, way out there. Next NFP is not for another month, way out there. I mean, it's cool. It's cool. We got a lot of good trading between the next real risk events. So this is a great time to be a swing trader. And at some point, by the time we get to all these other news events, we will have the volume and volatility back. So you might notice volume is low and VIX is below 20. Okay? So this is cool because maybe it's still slow next week, but as time is ticking, every tick of the clock, click, 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 at some point, volume and volatility is going to return. And we want to be in the right positions, or at least be in the position to recognize that the game is back on and that we dial up our aggression. From shooting at rabbits to like, hey, maybe we don't get moose, but maybe it's time to go for deer. Huh? Venison sausage. Finally, get rid of that Hassenpfeffer and rabbit stew. Go for some venison, huh? And soon the elk and the deer, or the elk and the moose will return. Maybe even bear. Have you ever had bear sausage? Hey, don't knock until you try it. Peace on earth. May the pips be with you. May your profits be above average. Please have a wonderful day. Please click the thumbs up button on your way out. And I'll see you later. Cheers. That just happened!